Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is not Wednesday, July 23rd. How did I miss that? It is Thursday, quite obviously, January 24th, and it is 5:15 p.m. Eastern Time coming to you from the financial capital of the South, St. Augustine Beach, Florida, of course, with tonight's Revere Roundup Daily Market Insight video. Market state, we're in an uptrend since the O'Neill follow-through days on April 22nd, 23rd. Coming up, 3 months now. Check the trend gauge over here. We got the coveted four green arrows, market leaders, green and acting well. And then all six, actually, of the major indexes that we track, trending above their short-term 21-day moving average, medium-term 50-day moving average, long-term 200-day moving average. Still extended. What a run it's been over 3 weeks now. Extended above the 50-day moving average for the NASDAQ 100 and the S&P 500. When you're not in as strong a market as we are in now, we normally don't spend a couple of days above those extended levels, that being 4 to 5% on the S&P, 5 to 6% on the NASDAQ 100. When we break back below those levels, we'll take that caution sign off. So what happened today? Not a whole lot. Mixed close. Really, the big news was Google and Tesla earnings reports. Google initially down, but finished positive, and Tesla down as much as 10%, closed down 8.2% on the day. Mixed close, but that didn't keep the S&P 500 and NASDAQ 100 from once again making all-time highs. But some serious lagging going on by small and mid caps. Small caps breaking out of a cup and handle yesterday, but pulling back near the 8-day moving average today. We'll take a look at the charts momentarily. Here's the mixed data. The 21 over 21 down an average is 0.4%, 9 up, 12 down. The Turbo 12 only 4 up, 1 neutral, and 7 down, but on average up 0.4%. The Big 8 held back by Tesla, down an average of 0.38%. The RG8 SAR8 Growth ETF Composite down 0.75%. S&P 500 opened up 0.15. Take range all day today, faded into the close, closed near the lows, but still positive 0.07%. Equal weight down 1/3%. NASDAQ 100, despite poor action in Tesla, closed positive on the day, 0.21%. Equal weight, NASDAQ 100 down 0.13%. Dow, mid caps and small caps all lagged on the day. We'll check those charts shortly. Global diversified 60/40 stock and bond down 0.18%. Our flagship GROTECTION portfolio slightly positive by 0.06%. Turbo to the upside 0.36%. Reminder, please like and share and subscribe our YouTube page. Trying to get the reach out there. And if you're checking out our videos on YouTube, Instagram, or X, please retweet, share, like, you know the deal. We provide this free to everybody. That's all we ask in return. All right, so let's get to the charts. We'll start off with the S&P 500. Let's go to the 60-minute chart. So the breakout, 1, 2, 3, 4, 5, 6 closes above this breakout level, 62.84 to 62.90. And tight sideways day today. We need a little bit more of those to get closer to the moving averages, namely the 50, and we're getting back a bit extended above the 21-day as well. But it's a bull market until it's not, and climbing the wall of worry is very obviously what we continue to do. Let's take a look at the RSP. This is the equal weight, still has not broken out. Note the relative weakness, and this is really simply because the NASDAQ 100 is leading. There's the all-time highs riding the EMA higher. Let's look at equal weight NASDAQ 100. That looks pretty good as well, just not quite as strong as not only the S&P 500, but the NASDAQ 100 market cap weighted as well. Dow Jones Industrial Average breaking out inside day today, still relative weakness versus the S&P 500 very clearly. And again, this is why no chart is complete without a relative strength line on it. Let's go to the mid cap 400. When I last did video, I said this was a failed breakout. So what did we do? We broke back out on Wednesday, pulled back to the pivot today. Not bad action there at all. And Russell 2000, I mentioned it again. It was a failed breakout, another failed breakout last week on Friday, but a true breakout on Wednesday, pulling back near the pivot and the 8-day moving average today on some weakness. So those are the major indexes. Let's check some inter-asset correlation. The VIX actually made new cycle lows today before rallying a little bit, but it's below the declining 21-day moving average. The US dollar uh, making a little pop higher after being down for 4 straight days. How did that impact precious metals? Gold pulled back after the gap up 3 days ago near the top of this base. Mild pullback today, sitting on the 21-day moving average. Gold stocks after the 2-day move out, gave it back, just pulled right back to the 21 and bounced today, reclaiming the 8 during that bounce. Silver, 2-day pullback. Bitcoin, tight. Look how tight that is now. About 10 sessions sideways, riding the 8 EMA higher. GROTECTION added Ethereum today. The more I read about this, the more excited I get about it. And you're going to say, wait, this is extended. It went straight up. Well, it pulled back 2 days and it flashed the classic way to sneak into something, the 60-minute stochastic cross. So I bought this morning at the open for GROTECTION. That's the pattern we use. We ideally, it also coincides with either a bounce or an undercut and reclaim of the 8-day moving average, but the Ethereum was really extended because of this move that it made off of the 20 level. So we didn't get the 8 touch either, but we size it against the 8 for our initial position and then look to add it, other low risk entries. This one simple change to my approach using the 60-minute stochastic has made a really big difference uh, in overall average trade returns. And the main reason why I'm obeying that and not chasing individual names, but getting much more lower risk entries using that. So where are we now? On to bonds. BND, the broad bond index, tight, closed today down just slightly. TLT also down a bit. So the yields, the 30-year, uh, basically unchanged there. The TNX up slightly in a range kind of on interest rates. All right. That's our inter-asset correlation. Let's go to the tail of the tape. We got updated sentiment data today. AAII, bulls actually dropped, but oddly, bears dropped as well. Neutral is what kicked up. This is a orange man bad on parade right here. This makes absolutely zero sense unless you can explain it by uh, individual investors that despise the administration ignoring this massive tear that the market has been on. That's really the only explanation. NAAIM, this is professionals, investment managers. Be to see this tick down 3 points. This hit 99 a couple of weeks ago. When you get near 99, if you clear 100, it's a pretty reliable top indicator. We did not pierce 100, and we've been pulling back, and the markets have been going higher. So good for us and our clients and followers who are riding them higher. Minor news day today, but the US and EU supposedly making continued progress on a trade deal. Day count Sixth day of the breakout. Call today a consolidation day with the mixed close. 23 days above the 8 EMA, 63 days above the 21-day EMA. That 21 continues to set or be near historical records. Tight range all day, mild fade into the close was the action. S&P 500 ATR all the way down to 0.71%. Pretty sure it'll fall a little bit further today after today's third of a percent range. Sectors, oil's up, XLK up, uranium up, nuclear up to the downside with interest rates ticking up a slight bit. ITB down, banks down, basic materials down, discretionary down because of Tesla. That's a big weight. And the XLY, transports and retail down. Three buys across the portfolios, GROTECTION with a starter on ETHA. We also bought FCX as copper continues to look very strong. 1.41 adjusted beta, 6.06% balance at risk. Turbo bought ALAB 2.27, volatility adjusted beta 5.69, balance at risk. Bottom line on the day, mixed closed. S&P 500, NASDAQ 100, all-time highs again. Small caps, mid caps lag. Mixed on leaders. Keys continue. I mean, we keep saying that these keys are the same over and over again, but really until something breaks and really relative to the 8-day exponential moving average on these indexes and or leaders pulled back for a day and 30 minutes this week before resuming their uptrend. But just keeping an eye on all-time highs and the 8-day moving average on the S&P, the NASDAQ, and the Russell 8-day and the recent high of 2283. All right, get to some charts now. I showed ETH on the buy. Let's show FCX. FCX as the buy. This was a 60 stochastic buy as well. In this case, it was off the 21-day moving average. Now, they reported earnings yesterday. The reaction was a little bit muted. This big spike was tariff related 2 weeks ago. But copper, uh, it's CPER is the ETF for copper. And you can see there's the big spike there and making higher highs. So copper's going without the copper miners. The ETF is COPX. That looks a lot like FCX. FCX generally outperforms it. We got a good low risk entry in there. That's what we went with was FCX. ALAB was a buy in um, TurboTection. You can see this that they say it'll either wear you out or scare you out. Uh, False breakouts wore out a lot of the bulls on ALAB. Here's three pokes out of this tight range above 100. One finally worked. I can't recall what the news was from Monday that caused this to take off. Pulled back, held the 8-day moving average, two back-to-back tight closes on ALAB. Just like I said, everybody that thought they were going to catch that breakout didn't. It pulled back in every case until it didn't. And that's what the market does. It seeks to confuse the masses. Let's take a look at a few other charts. We'll look at Tesla, which this is unfortunate, but it did hold the 300 level, breaking the stacked moving average of 821, 50, and 200. So that's a lot of resistance to claw back up through, and the relative strength is looking not so good as well. Google, on the other hand, bit of a winner, although finished quite off of the highs, but this was down 2 to 3% before their conference call. They really kicked up their CapEx spending, which benefited all the AI data center type names and power names. But they said they need to do this CapEx spending because they need it to keep up with demand. So there you have it. Google, let's see what else stands out. Take a look at what we own in GROTECTION here and see how they did for the day. Mixed bag there as well. Palantir, Tight range today. GEV not giving anything up from its earnings gap. Hood tight action along the 8 EMA. Nvidia another high. Coinbase tight action along its 8 EMA. MP Materials tight for the second straight day. There's Freeport, which we bought. Iren continues to hold the 8-day moving average. Look at it. Basically has touched it every day for 2 straight weeks after a failed breakout on Monday. AVAV gapped up. That gap up was met with sellers, and this trade's kind of thin, and I'm probably going to get out of this before too long, as I just really don't like the lack of liquidity intraday in it. There's Bitcoin. We own that as well. And that is going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone is 855 Real Wealth. That's 855 732 5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. He's the compliance officer and spearheads all of the new client onboarding from a compliance standpoint. And our flagship portfolios are named GROTECTION and TurboTection. The common thread is Tection, designed to make money during uptrends, get out of the way during downtrends. TurboTection started and managed by Ted and Connor. A smaller portfolio, they can get into some of the less liquid names that GROTECTION can no longer get into because of size constraints. And with that, I'll wrap it for Thursday, July 24th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.